If I had to start over with just $1,000 in 2025, and I had all the knowledge I have now as a CPA, this is exactly what I'd do. No fluff, no hype, no lottery ticket thinking. Just a smart, realistic, step-by-step strategy to turn that first $1,000 into the foundation of long-term wealth. Because here's the truth, $1,000 won't make you rich. But it will do something more important, it will teach you how to make your money work for you. It's about learning the habits, the mindset, and the systems that separate people who stay broke from those who slowly build financial freedom. Let's break it down. Step 1. I'd take $50, $100 and invest in financial education before I put money into the market. I'd put it into my mind. That might mean buying one great finance book, joining a credible investing course, or even subscribing to a newsletter that breaks down market trends and personal finance in plain English. The ROI on knowledge is exponential. One good idea can make you thousands. One bad decision you avoid can save you even more. If you're investing without education, you're not investing, you're gambling. Step 2. I'd use $100, $200 to eliminate high interest debt. Debt isn't always bad. But credit card debt? That's financial cancer. If I had any lingering balances with 15 to 25% interest, I'd knock them down immediately. Why? Because paying off that debt is a guaranteed return. If you eliminate a 20% interest rate, you've just made a 20% ROI, risk-free. Before you invest in stocks, invest in clearing your financial runway. You can't fly high if your engine is leaking money. Step 3. I'd put $500 into a diversified, low-fee index fund. The market may go up and down, but over time, it rises. And the easiest way to ride that growth is through index funds like VOO, VTI, or a global ETF. These funds let you own a small slice of hundreds or thousands of companies, without having to pick winners. I wouldn't chase individual stocks. I wouldn't try to time the market. I'd focus on time in the market. Set it and forget it. This is where you let compound growth do the heavy lifting. Step 4. I'd use $100, $200 to start building my personal brand or skill stack. You are your most valuable asset. So I'd take a portion of that $1,000 and invest it in me. That could mean buying a domain name and launching a blog or portfolio site. It could mean upgrading my LinkedIn profile. Or enrolling in a short course that teaches me a skill that's in demand in 2025, like AI tools, digital marketing, content creation, or Excel mastery. When you invest in skills, you increase your earning power. And when your income grows, so does your ability to invest more later. Step 5. I'd open a Roth IRA or high-yield savings account for any money I don't immediately need. I'd park it somewhere that compounds tax-free or earns safe interest. A Roth IRA is ideal, especially for young investors, because the gains grow tax-free forever. If I'm not eligible or already maxed out, a high-yield savings account gives me liquidity and a small return while I plan my next move. This step is about balance, safety, having a cushion. Step 6. I'd build the habit of consistency. $1,000 is just the beginning. What matters most is turning that initial investment into a habit. I'd set up automatic transfers, weekly or monthly, even if it's just $10 or $25 at a time. Wealth isn't built in windfalls. It's built in rhythm. That muscle of setting money aside, every single month, is what creates freedom. You don't need a perfect plan. You need a consistent one. Step 7. I'd avoid these traps. I wouldn't buy crypto because it's trending. I wouldn't follow TikTok stock tips. I wouldn't day trade. I wouldn't YOLO into meme stocks. Why? Because when you're starting with $1,000, you can't afford to lose it trying to get rich quick. The goal isn't fast money. The goal is smart money. And smart money doesn't chase, it compounds. Step 8. I'd track every dollar and review monthly. What gets measured gets managed. I'd track where the $1,000 went, review my returns, and adjust based on what I learned. This builds awareness and financial maturity. Most people lose money not because they make bad decisions, but because they don't know where their money went. I'd know. And I'd learn. And I'd get better every month. Final thought. It's not about the amount. It's about the approach. That first $1,000 is your classroom. Your training ground. If you treat it with discipline and intention, it becomes the foundation of something far bigger. Because the truth is, wealth is a skill. And once you learn it, no one can take it from you. If you've got $1,000 to invest in 2025, you're not behind. You're ready. And what you do next could change your life.